Before we get started, I just want to let you know, for those of you who don't know, January 27th and 28th, we're doing an event called The Future of Money, Governance, and the Law. We've got folks coming from the European Commission, the World Bank, the United Nations, the Union of Arab Banks, the Bank of England, Central Reserve Bank of El Salvador, Estonia, the Federal Reserve Bank of Boston, Ginny May, Her Majesty's Treasury, the Ireland Government Financial Services Department, Kingdom of Jordan, Kuwait, I got to fix this one. I don't know what country that is. Foreign Commonwealth and Development Office. That might be the UK. Estonia, Department for International. So lots of different government agencies, lots of states, right? California, Virginia, Georgia, Texas, District of Columbia, New York, Kansas, Washington State, Massachusetts. So lots and lots of also NGOs, right? The American Red Cross, the American Blockchain Political Action Committee. Todd White runs this. I think they're looking. Do you remember how much they're looking to raise, Kath? Like 300 million or something like that to promote the election of politicians that are friendly to the blockchain and the cryptocurrency space. We got the Global Digital Asset and Cryptocurrency Association and some organization called GBA, academia, and a bunch of private sectors. So all of these folks are going to be participating in an event that we're holding at the National Press Club, January 27th, 28th. Please if you're interested, please get your tickets now. The prices go up every couple of weeks. We're also going to be giving out annual achievement awards. So we generally give out 4 awards, right? One for leadership, innovation, social impact, and courage. These are incredible. They're beautiful awards. They're these crystal awards. We want this thing to eventually become like the Academy Awards for blockchain. And then we have a reception at an incredible place called St. Eves. The theme is the Roaring 20s, because this is in fact the Roaring 20s. And I'm just going to show you a quick little visual of the reception. So if you've never been to the press club, it is a very elegant and majestic venue. When we talk about where the reception is, it's just drop dead gorgeous. So the combination of the quality of people, the quality of the venues, the relationships and the impacts, I think is going to be phenomenal. We're going to do 4 of these events a year. In January, it's going to be the Future of Money, Governance, and the Law. In the springtime, it'll be Blockchain and Sustainable Economic Growth. In the summertime, it'll be in January, it's the Future of Money, Governance, and the Law. In the springtime, it is Blockchain and Sustainable Economic Growth. In the summertime, it's Blockchain and Liberty for All. And in the fall, it is Blockchain and Infrastructure. So there will be an opportunity for folks to participate. If any of you are interested, there's also sponsorship opportunities. I'll have to come back to this one. All right, so given that, let me go ahead and introduce, we basically are going to hear from 2 primary sources of information. We're going to hear first from Joseph and Jonathan. I guess we formally made the announcement. It has been in press release that the GBA is combining forces with the Maven Federal Credit Union to launch the very first blockchain-based credit union in the country. I don't know, maybe the world. And we got Jonathan and Joseph. They're gonna tell you their perspective on banks, credit unions, and the Maven Federal Credit Union. And then after that, I'm going to ask Kath to come up. She's been doing a lot of research on what banks have been doing around the world with CBDCs and different projects. So she's going to give you sort of a survey of what's happening around the world. So it's going to be a really awesome time. I'm going to ask you guys to hold your questions to the end, if you don't mind, but by all means, feel free to drop them in the chat. And then hopefully we can have, 20 minutes, half an hour, maybe 40 minutes to just have open dialogue and sort of share thoughts and ideas based on what we've heard. So with that, I'm going to stop sharing my screen. Joseph or Jonathan, are either one of you sharing the screen?
I'm good. I don't need to share a screen. I'm just going to kind of, I'm just going to talk a little bit, and I'm sure Jonathan will probably just talk a little bit. And field some questions, and hopefully I can answer some questions before they're fielded. So,
Right. Well, then I'll just leave this up. And Joseph and Jonathan, the floor is yours. Why don't you just introduce yourself briefly, and then feel free to share with us your thoughts.
yeah, sure. So I'll introduce myself real quick, and then Jonathan, you can introduce yourself, and then we kind of engage from there. So again, Gerard, thank you for having me here. It's an honor. So my name is Joseph Lowe. I've been a part of the GBA for several years now. And so I always appreciate and I'm honored to be a part of these meetings. I'm the lead organizer for an organization called Maven Federal Credit Union. Matter of fact, Maven is being sponsored by the GBA based on something called a single association common bond, which means that we have something in common, right? Which is blockchain, which is distributed ledgers or decentralized networks, however, all these different terms. I'm trying to keep this very general so I don't lose anybody. So why are we putting together a credit union, and more specifically, why are we trying to do the first blockchain credit union? So here's the thing. As the organizer, we were coming across a lot of like problem statements. One, how do we deal with the SEC? How do we have our own bank without having a bank? How can we help finance each other? We have all these different projects. It's always about how can we get money? How can we get loans? How can we start our businesses? We work together. How can we invest together? And how do we do it without the SEC, basically finding us as a security and maybe us, getting in trouble a little bit. So this is a 5-6 part problem statement. We're always scratching our heads. How do we do this? One of the very few looked at sectors or industries is actually the credit union movement. Everybody usually looks to go to either a private their own blockchain startup, and I don't mean private in a centralized way, but they want to start their own blockchain. They want to then they're trying to figure out, how do I not go to jail for selling securities? Because a lot of times you're tokenizing the shares in a corporation. And then it's, how do I maybe start my own bank? Which means, again, you're defeating the purpose of a blockchain, because the bank has private investors, and then you have account holders who are customers, and now you're opposed again. So one thing we started to look at the beginning of this year and the end of last year was a credit union. So a credit union has banking features like a bank. However, it's a nonprofit. Okay, it's all right, thank you, William. It's a nonprofit corporation. So everybody that has an account at the credit union is also a shareholder or an owner in the credit union. No different than if you went to a Bitcoin or Ethereum. You own your share. The currency, the Bitcoin itself or the ETH coin itself, is a piece of ownership. And the thing is like, how do we do it in a manner that is also not centralized? Well, we all become owners. We all become equity holders. And the other thing is that a credit union's ledger is open and public to the membership. It's permissioned, because you can't come into it unless you're a member. Okay, so it's permissioned and it's public to membership, which means the ledger is distributed. We're also looking at ways of how do we fully decentralize it. So a couple things that are conflicting typically in this industry is you have a bank core, and then you have a distributed ledger. And people are always trying to figure out, how do we do this, right? So we are looking at just unrolling a bank core like you would unroll a scroll and tethering it to a blockchain. So the concept would be all members of the GBA, and only members of the GBA, whether they're organizations or individuals, would be able to have their own bank. In the credit union industry, we have something called surveys. And basically in blockchain, you have something called consensus. So what we're trying to do is kind of achieve what the GBA set out, which is stitching the public and private sector together and creating this kind of ecosystem where we can develop products and we can facilitate the seller those products in our business startups. So we wanted to complement that. We were like, Gerard, how can we create an engine that would allow for savings and lending to help that? The other thing is we're stitching the language of the private blockchain industry, and we're trying to make it an industry, not just they look at us like hobbyists right now. And I can tell you about that later, but they look at us as hobbyists. It's not a real industry because it doesn't have an industry code from the NAIC. So the thing is how do we stitch that with regulation language? You have things like instead of wallets, you have shares. You have instead of again, you have distributed ledgers. It's both the same in the credit union industry. Okay, this would be a perfect example of how we can implement a blockchain, how we can implement some type of financial vehicle that would benefit us all equally. I will tell you, we're going to be sending out also kind of like, again, surveys to the whole community. We want consensus from the community. We want the whole community to be a part of this bill. We're all going to share in it, right? Some of the other specifics, and I'm going to talk real quick on some of the things we're looking at doing. Some of the other specifics, what we can do is we can create currency. We can create, not currency in the traditional fiat sense, but we can create what you would call digital currency tokens, whether it's tethered, whether it's mined or minted through proof of stake. By the way, we would be looking at using a proof of authority and proof of stake hybrid for the creation of this blockchain, blockchain credit union, okay? But we can do all that and we don't have to worry about the SEC. Not that we're not regulated, everybody's regulated, whether we want to feel we are or not. We're basically, because we're under the Federal Credit Union Act, we're not regulated by the SEC. So we're able to create coins, which are basically tokenized shares for different, investments or different lending loans and different loans that we package into a fund. And we're able to tokenize that into a currency, whether that's limited pre-mine, whether, to speak blockchain, but limited pre-mine shares, whether it's a tethered currency. Yeah, and the other thing is that we're able to transfer, buy, sell within the network of this community without worrying about any type of securities violations, because we're all members. And transferability, also known as buy-sell transaction, is completely legal within the Federal Credit Union Act. So all we're doing is merging their language with the blockchain industry language. Okay? So I'm going to stop right there. Jonathan, I'll pass it over to you and kind of let you speak a little bit, sir.
Okay, wonderful. My name is Jonathan Braniff, and I'm CEO of Block Junction. And Block Junction is an organization that services the credit union and the credit union movement by providing services that are kind of beyond the realm of what the credit union is able to provide, whether that's non-traditional banking services or other kinds of services, which allows us to combine together to create more strength as we continue to build networks. So we've got GBA involved, we've got Block Junction involved, we've got Maven Federal Credit Union. There's various different other organizations that are coming into the mix as we create this kind of network of people really focused and dedicated on transforming the lives of ordinary people. To give you a little bit of an example of some of the things that we can do. So think about banking products themselves. So one of the things that we're really focused on is opening up credit and opportunity for people that have had challenges with the banking system and with financial services in general. Free services go to people with money that don't even notice that they're getting the free services, while people at the bottom of the spectrum that are struggling to live, survive, create whatever's next are basically lambasted with all of these different costs and structures that really make it difficult to innovate and be creative. We want to open up creativity through this banking system and through this network. The GBA is an incredible community. Just listen to the people that are involved with this network, all the people all over the world. What happens here in the United States can eventually evolve into all different parts of the world to create community-based banking systems that allow us to rebuild our communities. If you look around, you look at the Midwest, look at the north of England, look at the Banlieues of Paris, look at all of these different places around the world where we've ran into this kind of monetization of everything and capitalization of things that we care about to the point that it loses meaning and value. We've lost our value and our connection with it. And a part of what Maven is about is to reconnect that value and reconnect it back into communities. That's why it's so important that GBA is the first community, because this is the most powerful blockchain community in the world. And we are building a blockchain credit union. So think about these three basic services. Number one, we want to get rid of predatory banking practices. So how do you do that with this network? Number one, you make it easy to cash a check on your phone. Number two, you make it easy for money to be distributed somewhere in the world through the blockchain. So it isn't expensive for people to send money back home or whatever it is they need to do to grow and operate and develop their businesses. And number three, you make it easy for someone to get money on Friday that gets them to Monday so they can get by. That's number one. Number two, get rid of all bank fees and get rid of those fees, those $35 fees that have been hit by pretty much everybody who's been on these calls who lives in the United States, because all the major banks charged about $1 billion to people. So we've got to change how we do banking, and we've got to do that as a community and as a network. We can change how we do this, and we can do this together. So just imagine the opportunity of what can be done in your community with the blockchain or with blockchain businesses, and how does that connect into a credit union? It's an incredible opportunity for all of us. And this begins by opening your own account and building a network wherever you are and connecting us all together to be able to do something that can make people's lives better within our network and across our community. Joseph?
Hey, Jonathan, can I say something real quick?
Yes.
I want you to know that you will face criticism, right? There are people that will come against you because of the impact you will have in the financial system, right? Bill was just talking a little bit about this, but you now have the proper answer whenever the criticism comes against you. You know what you should say? The dogs bark, but the caravan moves on.
That's right.
The dogs bark and the caravan moves on. I like it. I like it.
Yeah.
A part of today is, you guys are all family, okay? This is the GBA family we're talking to. So we're being very open, we're being very honest, we're trusting this community because we all work together here. This is a quiet time as we build this. This is a campaign. And this campaign involves all of you being a part of it to be able to take it to the next level. What that involves is us reimagining how we work together. We are building blockchains for governments all over the world. We are building the new world. This is a part of it. This is a part of the opportunity of this community to really drive that innovation and to take it to the next level. So, today is about getting you to think outside the box and to consider how you could be involved with us creating this new mechanism for us to be able to work together. We don't have all the answers yet. We're just getting you to think outside the box. And on the basis of that, where do you go?
Let's do this. Let's open it up to questions, because I'm sure a lot of folks have questions on a whole bunch of things. So if anybody has questions, feel free to just unmute yourself and ask them, because it's a pretty interesting topic.
Yeah, this is Bill. So where are you guys now? What's your staffing look like? Do you have a board of directors? Also, who's your lawyer and how are you managing that? Remember, there's a reason why banks are the most heavily regulated entity in an economy. It's so they can control the allocation of money. So staffing, board members, who's your lawyer?
Got it. Good questions there, Bill. I'll take that. So again, so you asked about board members. I'm going to be the chair. So I'm the lead organizer. I'm putting this all together. I was the poor man's lawyer starting this. We're now engaging conversations with a couple lawyers to get ready because we're going to have to implement the BSA, which is the Bank Secrecy Act. One attorney we are engaging is affiliated with the GBA, and then we have a couple others. Okay, they were not needed at this first instance, which is from January till now. They'll be needed in a couple months. We're also going to be getting a lot of assistance from a partner credit union, which is required to start a credit union. To answer the rest of the questions on the board, do we have a board? We have to have a minimum of 5 board members. 3 have already been approved. It takes a credit union usually about 3 months plus to approve a board member. Okay, so it's not, so when you join a credit union, and I understand it's a little bit of a deep question you're asking about the banks. We're not a bank, okay? We're a union, just like there's labor unions, right? But there's also PEOs, right? Professional employment organizations, which are powerhouses, okay? And unions, instead of corporatizing a union, banks corporatize credit unions. So we can do quote unquote banking with shares deposit, where you put your money, no different than if you go and buy proof of stake like Algorand or something like that, or I think there's a couple other proof of stakes, and you buy it and you just hold your money there as a savings account and it earns interest. So it's the same thing for us, and we can give loans off of those funds. Now, because it's based on a membership, it has its own special act called the Federal Credit Union Act. Again, I asked you to look that up. Do we have to follow some of those banking rules? Of course, you have KYC, AML. I have no problem following that. The Bank Secrecy Act, I don't want to help launder money. So of course we have to follow that. The objective is to reduce lawyer fees by building in the red flag systems to pick up as much as we can. Again, so the background checks we have to go through are pretty rigorous. It's not like, again, for a member to join a credit union, you can have terrible credit, terrible credit. You may not be able to get a bank account, but you can get an account with the credit union. Okay, you can even get a loan. Okay, credit unions are pro loans. Matter of fact, we have to explain ourselves and report it to the NCUA, which is the administration for credit unions, right? The federal agency for that, on why we denied someone for a loan. We have to have special reports, right? So instead of saying, hey, this is why we approved them, we have to say this is why we disapproved them. So they work differently. They're also a deregulated entity or a deregulated agency. So they work a little counterintuitive to the rest of the US government, okay? But we have to go through federal FBI background checks. We have to go through credit checks. We have to go through tax obligation checks. We have to go through all kinds of things as board members, okay? So it takes 3+ months for a background check to come through. So we have 60% of the board approved and just waiting on the update for the last 2, okay? We're all GBA members as well, Bill, okay? Where we are at is into phase 2. There's 2 phases to building a credit union. Phase 1 is it's called getting your pre-charter, and then phase 2 is getting your charter. So phase 1 is actually the most difficult. To me, I felt it was the easiest. Okay, I was like, oh, I only have to do this step and that step, and we got our pre-charter, right? And then when you look at the chartering, which is steps 6 through 17 versus 1 through 6, you're like, oh God, it's insane. I got to build a Bank Secrecy Act, a policy procedure manual, KYC, AML. How am I going to fight fraud? According to the NCUA, that's actually easier. So we have to give all of ourselves here. We're all a part of this dream. We have to give ourselves a pat on the back because if it wasn't for you guys creating, being members of the GBA, we wouldn't have this credit union bill. So the pre-charter is the hardest to get because we have to have something legitimate called a field of membership. If we don't have a legitimate field of membership and we just launched a nonprofit and we called it XYZ nonprofit to try to find a reason to start a credit union, we'd be denied. But because GBA has a track record, they have a history, They have real memberships. It's not ran by a bunch of basically imbeciles. It's ran by a bunch of professionals. And there was a lot of research and investigation on my side on how to get Build a Membership pushed through in a very efficient way. Instead of it taking 6 months, I was able to get it through in about 2. Okay, so it's still, though, here it is 9-10 months, and we're just now launching the sale. Now that our Field of Membership is approved, we have what's called our pre-charter. So our pre-charter allows us to raise funds without violating securities laws. Okay, we're under the protection of the NCUA and the Federal Credit Union Act. So now we can go raise funds and to start this operation. And we don't we take that money, we put it with a policy procedures manual, couple other things, and we have our charter. Now, the game plan regarding staff, Bill, is we are not trying to build a big building. We don't want a big building. We want something like we have with blockchain, right? We want to have a network government. So what we want to do is we're going to build a digital credit union. First of all, credit union laws say we have to have enough of an office space to serve our membership. Well, the office space is going to be an app on your phone. Okay, we're going to have the smallest office space that we can have, hopefully less than 500 feet, because we're not going to have anybody coming there. We're going to be working through a shared branch networking system, okay, to pull money out of it if you need cash or to put cash in. We're also going to develop mechanisms where you can deposit checks by phone, obviously, transfer digital cash, things like that. Okay, so what we don't want to do is load down the credit union with tons of staff and operational costs so we can return 0.10% dividends to your money. What we want to do is do things like I was telling you about proof of stake. So what we want to do with the proof of stake is create a proof of stake a decentralized storage system where we use encrypted, obviously encrypted like computer towers with tons of storage. And if you can help facilitate the network and be a participation node, you get extra dividends or coins that are as they're being mined. You're basically mining the credit union itself. So because now we don't have to pay staff, we don't have to pay a cloud unless like Amazon. We can kind of reduce our dependency on it. So it's a long question, but you had a 4-part question. It was pretty deep. I appreciate those. Any other questions?
Can I say one thing? Aren't you guys glad, gals, I should be proper. Aren't you all glad that you guys are here today to hear this? I mean, it's really exciting because we were literally talking about redefining, reimagining how money systems work, right? It is really completely exciting. And one thing that I do want to share, I'll provide more details after Joseph and Jonathan are done, but the GBA is building a couple frameworks and supporting technologies. One of them is the blockchain maturity model and the cryptocurrency maturity model, which essentially are going to provide some frameworks for maybe federal credit unions. So we'll talk more about that in a little bit if we have time. Any other questions?
I have a question for Joseph. Joseph, you're creating the nodes and you're going to be each node is going to provide cloud storage, sort of like Filecoin. What's the utility behind the cloud storage? Are you guys going to resell it? Is there going to be a function behind the storage that each node provides?
Yeah, so it's a good question. First of all, we're going to create a network of shared branches. So, and our take on what that means is a little different than say just a building or ATMs, right? So it can include those where you have these things called boxes. We're just going to keep that for confidentiality purposes at this moment. Big boxes, 20 to 40 foot across, right? And it'll have the ability to store a copy of the ledger every 15 minutes. No different than, Ethereum, no different than Bitcoin. And then we'll also have boxes that are computer towers. So yes, we're renting your computer tower space And the computer tower has to be, is going to have to be custom built because we got to make sure it can't be cracked open. If it does, you know, and there's different things, right? You're going to be like slicing it. You're going to be parceling the information. You don't want everything on one computer. But it's just like Filecoin. You're going to be basically storing those who act as participation nodes, and they help store the ledger. Instead of us having to pay Amazon or having to pay Microsoft, we can pay extra dividends out to the participation nodes. And that's just a start, Seth. There can be a lot more layered upon that.
And you may or may not know this. Is there a, I guess, minimum storage capacity that the nodes will require whenever you build a node?
Yeah, it'll depend on the size of the box, Alex. So as you can imagine, I don't know the exact numbers yet. We have a chief technical officer that handles those kind of things for me. But one of the, well, he also works with our vice chair, Dr. Mohar, who works with a lot of that, a lot more than myself directly. So he'll be looking at putting that together. But again, it'll depend. If it's a tower on your, on your desk, that's going to be one size, but then there will be boxes, say 20-foot long boxes that will hold, have the capacity to hold a lot more storage.
And just to support this, one of the things that we are doing, obviously, is working very closely with the federal government at every step of the process to make sure that we're following proper protocol and realizing the next steps as far as the industry develops.
Last question. Are you guys planning to use nodes on AWS or on any of the Google clouds, or just all basically boxes that are running from different area?
Yeah, that's a great question. Thank you, Alex. So we're going to have to probably start off on some type of AWS, right? Just to get this thing moving, okay? And then the goal would be to, instead of growing that Elastic server space and keep paying them more and more for the data we use, it would be then to push off of it onto something that GBA members own. The goal is to have it to where it's GBA only for everything. Okay, so that is the objective. So if we can hire, if we can pay dividends, we want it all inside the GBA network.
Yeah.
And when we say oh, GBA own it, what we really mean is GBA members own it, right? So the GBA does not have the desire or the goal to become a centralized organization. Ultimately, we'd like to move the entire GBA to a DAO, right? It's going to take us some time to figure out how to do that. We're in the process of doing several things in our standards and certifications area. We're building out standards and assessment methods, and we've tasked the team to start thinking about technology that would allow us to do certifications via a DAO and via almost like crowdsourcing information. So in all these areas, we're looking to figure out how to decentralize, so we can then be a model. If we can do governance, right, financial governance, standards and certification, if we can do all of these things in a decentralized way, we then become a model to teach other governments around the world how they can do the same thing. And potentially, if we're effective, we can then essentially bring those different counties, cities, states, municipalities, nations potentially into a governance framework, right, where no single person or group or entity has dominance over another. That it is consensus-based, it is rules-based. I'm not a big fan of the word equity. I am a big fan of the word fairness and justice, right? Everyone ought to be able to be playing by the same rules, right? And that's the kind of world that we want to create. So if we can create it in our space, teach others how to do it, and provide a framework or a platform. One of the projects that we have a proposal out is in South America to basically build. In fact, we're in discussions with the state up in New England to create essentially a decentralized blockchain for them that nobody owns, right? Other than the members of those government organizations or citizens. And that's the world we're trying to build.
Yeah, and I just want to, address a question or address a comment. Hey, the blockchain credit union is not for everybody. So, I mean, we're not running from government like a pyramid scheme. We're cooperating with the government. So it's okay. It's not for everybody. And no, I didn't read the book. I'm sorry I missed that class. No pressure.
Can I have a question?
Yeah.
And by the way, this is just for me to understand because I'm in this space as well. So I want to congratulate you for the work. I really like what you guys doing. Couple of questions I have. How are you gonna raise the money? The first question, are you gonna have, so what I understood is look like you are something like Algorand, like you pay interest, you're gonna have your token, you're gonna do DeFi, and you're gonna stack. Is that correct? And how are you gonna raise the money? Are you gonna issue ICOs? The problem here that I face is with the US, if I want to raise money with ICOs, now the private ICOs is allowed kind of, but public are not. While in other countries in the world, you can basically raise the money. The other thing you mentioned about AML and KYC, the problem we are facing, which is blockchain does not do KYC and AML. And it's kind of the appropriate way to do it on the platform like you, like myself, like the exchanges like Coinbase. My question is, if you have your own token or your blockchain, I assume it's hybrid, how you gonna do KYC? Are you gonna have blockchain only for users in the United States, or what's gonna happen with others who are basically a blockchain users living in Latin America, living in Middle East, living in somewhere in the world? How are we gonna basically prevent money laundering, and especially if they are using different cryptocurrency and they want to convert to yours? I just want to understand. Yeah,
it's a good question. Yeah, Seth. So I'm gonna try to tackle this whole thing at one time. So you have about 3 different questions. So the thing is how we have our token. Our tokens are basically tokenized shares in the credit union. Okay. So will we be in the United States and other countries? So basically, once we receive a charter under the Federal Credit Union Act, we have a couple things. It allows us foreign branching. Okay. I'm going to say all this, right, to let you know it's pretty, the regulation's pretty liberal. It's pretty open. We can have foreign branching and we can be in other countries, and we're under the regulation still of our host country, which will be the United States. The only people that can participate in this credit union are members of the GBA. And so how do we do with KYC? We'll have to do KYC. Okay, we can't allow anonymous users to join this blockchain. Okay, just like joining a bank, right? Just like joining anything. You get on Robinhood, you get on Coinbase, you get on any of the exchanges that KYC. Okay, so basically it can't be like Bitcoin where you're completely anonymous and, like you were saying, trafficking or laundering. Okay. Not saying that's what people are doing on Bitcoin, but it's been known to happen. So with the credit union, in order to be a part of the credit union, in order to utilize the credit union services, you have to be a member, which means you've been identified. Okay. And what that also does is it'll allow us to kind of reduce challenges between members. Okay, like theft. We know if you try to steal, if you try to do anything, you're coming through your account to do it. Again, it's a permission blockchain, but once you're inside, it's public to The ledger is public to all those can see, except of course your private information.
So basically,
Other-
you're creating a private ledger, and so the trading of the coin is going to be privately inside to its members only, in order to maintain AML and KYC procedures. Because once the coin is free out in the rest of the world, then you lose the KYC. I think is what Seth was referring to. So the trading of the coin, or the exchange of the coin between members, is only limited to its members, to the private exchange you guys are creating, or are you guys going to be able to integrate into other exchanges that do their own KYC in order to be able to maintain KYC and AML standards?
Right, it'll be exclusive to membership. Okay, so now in saying that, with foreign branching, the NCUA, and especially any credit union you partner with, they want you to take it slow at first, right? Like they don't want us, I think Seth said something about an ICO. We want to steer away from that concept of an ICO, but we also want to stay away from trying to raise all this capital and do this and do that, overstretch yourself and implode. And that's what happens with a lot of those type of projects, right? They don't have the infrastructure, the manpower in place, and they just implode. They have too many things that they're chasing. So, but yes, pretty much after we start off, a year to 2 years, we'll start looking at foreign branching, because we do want to look at Latin America, and that's from Central America, Mexico, Central America, and South America as well. And there's different ways that we can facilitate the network through foreign branching or foreign deposits, creating liquidity pools. How are we going to raise the funds? Donated equity. Sorry, you asked that question too. So we do donated equity, and just like you brought up ICOs, so I'm going to use your terminology, your language. Even though we're staying away from that, so just like you would go to an ICO, you would like give them money, and then they'd send you tokens, placeholder tokens as a receipt. The same thing. You have donated equity. There's so much money we use to capitalize a credit union, and it belongs to the credit union. And then from there, you would get placeholders called MFX. Okay. And anything above and beyond that, whatever we raise, like now when you open up your own wallet or a shares deposit account, that money is your money, right? It's just sitting in there and collecting dividends. And we pay dividends, by the way. We don't pay interest. Banks pay interest because of securities. Credit unions pay dividends because it's everybody's an owner.
So thank you so much. Just to follow up, last thing. So who can? So you explained, which is the private and members being verified, which is good. But you know, with AML, there's a layering process, right? I get verified, okay, but the money is sent to me from a mafia, for example, in Russia or something else. My question is, for the verified member, how they can buy your tokens? Is it we will have to trace their money source of transactions from banking system, and you don't allow from blockchain, other like from BTC sources or others? Because if you allow it, you are not going to be able to trace it, right?
Yeah, it's a good question. It's a permission blockchain, so it can't just come in, right? You can't just have things come in and do whatever you want. So we're not having where Bitcoin can just magically enter the blockchain and then get traded. Now the coin, again, it's they're just tokenized shares. And so you have a share in this company, whatever that share is. And I mean, let me put it easier. What if you want to sell an NFT to somebody? You're selling an object, you're selling a title to ownership to a piece of property. You know, so the thing is, it's just transferability, which is already tied in. So you don't have to trace where our coin comes from member to member, because we already know it's from a previous member, right? And I apologize if I'm not.
Joseph, can I throw one thing in there as well? And then I want to recognize Victoria. She's got her hand up. One of the things, and Joseph and Jonathan, I don't even know if we've had this conversation yet, but one of the GBA members is a CipherTrace. And one of the things that CipherTrace does is they do advanced analytics of the Bitcoin, of cryptocurrency blockchains to look for patterns of things like, drug running, human trafficking, any kind of nefarious actions. So I do think that it's really important. This subject is really important. And one of the things that I'm really excited about is how we network with other GBA members to solve the problem. When we get to the website, one of the things that's a very strong value proposition for this credit union is to facilitate the interaction, the collaboration, and really leverage the capabilities of other GBA members. Because instead of all of us sort of being an island and try to fight the fight alone, if we can augment all of our capabilities with each other, we become a much more powerful, effective force. And the kinds of capabilities exist within the GBA network, and we definitely need to work together to tie those together. Joseph or Jonathan, did I say anything out of line? Or
No, that's absolutely critical. I know, Jared, there's a number of different conversations that we're already going through now with various different GBA members that are looking at ways to support the network that we're creating here. So it's really, really important. And there will be a lot more of that as we move forward, because obviously as we start to understand the needs of the community, we're dealing with a blockchain community right here that obviously is different people with different products and ideas and things that can be tied into what we're doing. That's the whole point of this whole network, is to give us all the power to come together to be able to make a difference for people's lives and to get this new technology to where it really needs to go. Everybody's talked about blockchain and the power of it, and it's really not being fully utilized to its full potential. It's all about, creating opportunity, and a lot of those opportunities have been sort of caught up in a lot of noise, and we've got an opportunity here to do things that can really help the members and allow a lot of these different initiatives that we're doing for governments and others to allow those to go mainstream. It's an incredible opportunity.
Yeah, absolutely. Listen, towards that end, Michael would like to share some stuff. But Victoria, why don't you make your comment, and then after that, Michael, if you'd like to share your screen, love to hear what you have to say.
Thank you. Good afternoon. I just wanted to follow up on what was said regarding KYC, AML, and just my background. I'm actually a certified anti-money laundering specialist, and my background prior to being in the government was in digital lending for consumers and small businesses. So my point is that they're doing KYC through an API is very simple, and it can be automated. And then at the same time, I know there was a comment that came up in the chat about doing as far as OFAC checks. You could basically do an automated OFAC check and check a bunch of different government watch lists. And then just one other thing, I know the gentleman mentioned about what if somebody with illicit funds contacts them to put it onto the blockchain. That's a different story, except for the fact that generally, if you're not on a watch, it can happen because of fraud or whatever, for whatever reason, you're used as a straw man. But that's a real what if situation. But I think you guys are right in that, if you set up an account, part of the process online is going to be entering information and identification information and documents to clear KYC and then do the check on the OFAC and the other government lists. So that's all I wanted to say.
Victoria, before we turn it over to Bill Cunningham, I do have a question that I'd like to engage with, which is out of scope for this conversation here.
Sure.
The topic is, how does OFAC do what it does as we move into a world where if you're using like a Ledger Nano or something, every time you do a transaction, it generates essentially a new address or the equivalent of a new account. What does OFAC's world look like when essentially we don't have bank accounts anymore, but we have addresses and we can generate thousands of them?
Yeah. No, you're absolutely right. I mean, OFAC is what we've got right now. And, over time, because, things are going to, obviously going to change, but really, I mean, OFAC is all based on, it's all based on identification of the individual and or the entity. And then you've got the government sanctions as well. So to your point, I mean, it's it's going to be interesting, actually,
we
because
should invite OFAC to our event, the Future of Money Governance Law, because
yeah, no, that would actually be, that's a lot to, that's definitely a lot to start talking about, because it's something that needs to start, those conversations need to start happening. So yeah.
On December 2nd, I think it's on our we're going to have a talk. It's going to be live streamed. It's going to be the executive vice president of the Boston Federal Reserve, the Union of Arab Banks, Digital Lead, and somebody from FDIC. They're going to be doing a panel conversation about the future of money governance law and central banks. So that'll be pretty cool.
Yeah.
Bill, you have something you'd like to share? He's ready. Look at that. Boom.
I'll mute myself. So this this is the letter that I mentioned earlier, the part of the letter that addresses the question. What you're seeing is just a linear line that looks at the decline in the number of FDIC insured banking institutions from 2011 to 2021. It's just a line. It's fallen from 7,000 to 5,000. And then if you extend that line, which is not what will happen. I know that that's not what will happen, but this is the extension of the line. If you extend it, then you get to December of 2039, where there are 0 banks. Now, what am I saying here? Are we saying that there actually will be no banks in the United States of America? Of course not. What we're saying is this, and hopefully everybody can see, and this is the reason why I'm so excited about this conversation. What we're saying is that with the option now of moving into different currency systems that, once again, you did not have 20 years ago, fintech and alternatives like Bitcoin, this might lead to the wholesale exit of banking institutions from the FDIC and Federal Reserve systems. Now, if that happens, here's what the global reserve currency world looks like. The blue part of this circle is 2021 US dollar. And then moving to 2031, and this just happened to come together. Moving to 2031, you see the US dollar, a much smaller percentage of the total global reserve currencies. Now, the reason why I wanted, and I'm going to stop sharing that. Anybody who wants that, just email me. I sent that link. We'll post that. The reason why I'm so excited is because basically, Joseph, you just shown me how that happens. You basically have just shown me how that happens, how the number of banks goes down and how that circle expands out. Does everybody follow that? I mean, I'm not crazy here, right? I mean, that's actually one of the, because we were trying to figure out what's the intermediate step? How do you get to both the decline in the number of institutions and that growth in Bitcoin as a global reserve currency? Well, you get there through institutions like this. So that's it. Thank you.
Boom, drop the mic.
Very impressive, sir.
Yeah, we definitely need.
Bill is now our spokesmodel. It's over with.
What do you call? Never mind. I'm going to get in trouble by saying it. My wife is saying, "Don't, Gerard." I just want you to know that Kathy and I are a great couple because I'm her eye candy. All right.
Okay.
Yeah.
You're too much, man.
I really am.
Sure.
Jared,
Can I ask a question?
Sure, but then after that, Trevor, you're right after Jonathan.
Yeah, and first of all, just thanks to everybody who's been just amazing on this call and allowing us to say what we were saying. And we're excited that this is something that's part of the GBA network, which is amazing. I know there's going to be a lot of people who are going to want to learn a little bit more or have a few questions or want to help us put together this campaign that we're just about to start to get all the members that want to get involved. How would we do that, Jared, if there's people in the call or anybody who wants to get involved? Like, is there a way to do that?
Yeah, I would say the easiest way is go to the gbaglobal.org website. At the bottom of the page, there's a contact form. Or if you just send an email to support@gbaglobal.org and just say that you're interested in the Federal Credit Union, then that'll hit our help desk, and I'll ask Kyle to compile a list, and we'll come up with with the response. We'll also be launching some stuff. Oh, actually, here's the best way. If you go to the gbaglobal.org site, subscribe to our newsletter if you're not already. As soon as we're ready for people to start engaging, we'll send that out. We'll do a MailChimp to through the newsletter, and that way everybody will get it. So that would be the easiest way for people to get connected. And Joseph and Jonathan, as soon as we have those instructions on how to participate, then we can send it out to everybody.
There's also a detailed post on the GBA site about Maven.
Yeah, there is currently a post on the GBA site about
If they want
Maven.
to go into search, they can find it.
Yeah, but I would say for right now, the best thing would be subscribe to the newsletter, and we'll have Joseph put something together and send it out to the entire community.
Perfect.
Fantastic.
Trevor, did you have something you wanted to share?
Yes, can you hear me?
Perfectly.
Does the creation of these virtual institutions like the savings societies and the elimination of the present banks, does that necessarily require the existence of these private coins?
Sorry, can you rephrase that? I was answering another question from another member.
Does Bitcoin have to exist in order to, as an example, Bitcoin, Ethereum, whatever, have to exist in order to make the virtual system that we've been talking about the past hour work?
Interesting. You want to do that or me?
Is that directed at us or just anybody? I would say that there's only
anybody who wants to comment.
Yeah, Trevor, so I'm a believer in reality, and I think the fact that it exists and it's pushing us into that direction, the answer would be yes, they do have to exist for this to be facilitated, because I don't know any other reality where that doesn't exist. Like, what if Bitcoin never existed? Would we have the system where we're at now? I'm a big believer that change always comes from the what you call it, like the underground or counterculture first, and then it becomes culture eventually. Rebellion, you could call it that word as well. So I think what Bitcoin and Ethereum did was show the people where we were blinded, right? Like, so one of the questions I was answering for another member was they were asking about shares. Yes, shares are regulated by the SEC. The credit union issues shares, right? So the big challenge is no one's looked at credit unions as a financial vehicle for the people and a distributed ledger, not until now, right? So I would credit my interactions and my engagements with Bitcoin and Ethereum or any type of digital asset or currency over the years is the inspiration for why this vehicle is coming together. So I hope I answered your question. That's just my opinion though, right? That's not a fact.
And I think just to support that, and part of this ties in with William's graphics, we just don't know what's going to happen to the world over the next few years. We're going into quite a turbulent time. I'm sure everybody's noticed that things are getting a little bit sweaty. So, we don't know what's going to happen. The US dollar may be perfectly fine. There may be no issue at all. I actually honestly believe that the US and the euro will probably end up being international currencies that are backed by digital assets that act as store of values. And in many ways, that may end up saving the dollar from pure collapse with what's going on now with the heavy leveraging that is currently facing, and how that inflation now is starting to trickle into the economy. So there's a lot of things that we just don't know yet. And part of what we want to do is make sure that we are creating a foundation that allows this blockchain community to build what it needs to do and to allow us to be able to transition into whatever this is supposed to be next. That's what this group's all about. That's why we work with governments. That's why we care about why governments do certain things and how they behave, and we support them. We don't try to fight against them because it's not going to work that way. It works whenever you influence and you inspire and you provide an opportunity to do something that actually is better than what maybe people are already seeing. In doing that, a good government will jump at that opportunity and will want to change.
All right, so we got Victoria, we got Mark, and we got Bill. And then after that, I want to turn it over to Kath, because Kath has done some research sort of more globally, and I think everything we talked about is a great segue into what she's got. So Victoria, then Mark, and then Bill.
Yeah, thank you. I actually just wanted to add on to the answer to that question, because it's interesting. I'm in the process of writing something about this. And to answer your question about the blockchain, so obviously, without getting into the history of it, but blockchain was invented by the inventor of Bitcoin. And Bitcoin cannot
I have
exist.
to correct you.
Okay.
Bitcoin, the first mention of blockchain that I would describe is to Scott Sternetta in 1991 and his research partner Stuart Haber. They referred to it as a chain of blocks, right? That were cryptographically sealed. I'll put a link. Well, if you go to the GBA YouTube channel, you'll see some videos by Scott, and he talks about the birth of blockchain. And then before that, in the late 80s, there was some work done that really was a predecessor. But blockchain was really the first operational blockchain was put into production in 1991.
Okay.
But Satoshi Nakamoto is the one that really sort of popularized it and really sort of brought it into the mainstream.
Okay.
Sadly, Satoshi has lost all of the keys and apparently has no access to all the Bitcoins that were mined in the early days.
Right. And, but at this point, Bitcoin still needs a blockchain to exist, and as does Ethereum, but blockchain does not need Bitcoin. So my point is in that you've got certain coins out there that are all blockchain based coins, but the blockchain itself, but they don't need Bitcoin. The blockchain doesn't need Bitcoin, Ethereum, or any specific coin to exist, or any specific token to exist, because
blockchain, that's correct. Blockchain is a technology, and that's where people get it mixed up. It's not a currency.
Right.
It's a technology through which currencies ride, but blockchain has a lot more capabilities than just creating cyber currency or coins.
Exactly.
And the difference between the 91 version and the one Satoshi created is the fact that he created the ability for the blockchain to do the privacy that it does today. 91, they didn't have that in place with those blockchains. Yeah, they were there, but they didn't have the capabilities of the initial Bitcoin blockchain that allowed cyber currencies to live on its own. The one in 91 did not allow cyber currencies to have the freedom that they have today. But it was created way back, even before 91. They were working in the 70s. They were doing, crypto work back then. But it just developed over time into what Satoshi created in, I think, 2009, which allowed cyber currencies to be what they are today.
Yeah, for those of you that are interested, I just put a link to our working groups. We have about 50 different working groups, and you can see some of the ways that blockchain is being used in ways outside of currency. Let's see, Bill, I think you're next.
Wait.
No, I think Mark is next.
Oh, sorry, Mark, and then Bill.
Yeah, no, this is, and one thing I just wanted to actually kind of point out as we, before we move too far away from CBDCs, digital currencies are going to have an interesting use case that I'm starting to see emerge and stuff. When it comes to certain nation states, they're going to have currencies that really are not desirable or scalable on a global basis. For example, if you are a business owner in Zimbabwe, you're going to do most of your domestic transactions in Zimbabwean dollars, but outside of that, it is not going to be worth anything. And so digital currencies, if you're going to be able to start using your dollars to buy digital currencies, that would then have use either for investment or for just exchange outside of the borders of your country. That's going to be one compelling type use case for it. Another thing is, and I'm not quite as up to date on global finance structures and everything, but could that not scale up to a, CBDCs could not scale up to the point to where you could circumvent global sanctions? And what I think about is, could that be used for bulk oil payments?
But let me hold that. Let's circle back around that, because again, that's a great sort of segue topic. Bill, did you have something before we switch over?
Before we switch over, yeah, the question concerned the competitive nature. Did you need to have a substitute? And as the slide on the screen shows, yes, part of what's going on is that you did not have this tool 50 years ago. So there was no way to exit the fiat currency system. The other thing is, as again, this slide points out, as you know, and this is one of the areas where we may or may not agree, but it's always been our contention that it was a failure of the regulators to protect the public interest that led Satoshi to look at using the technology which was available, which he uniquely saw as being available, to create an alternative. And I think
I agree with that.
Okay.
I totally agree. Hey, listen, Kathy's done some research. Kath, why don't you sit here, and why don't you go through, here's your slides right here.
Okay, a few quick conditionals. Hello, everybody. I don't usually talk about the finances. I do the events. But today, George just asked me to throw some stuff together of things that we are researching. So can you see my screen? So I'm going to try to, can you see my screen? All right, I'm just going to go over a couple of bullet points. These are just points for discussion. I'm not going to really give any opinion on them in deference to the great minds that are already here on this phone call. But a couple of things that we are researching about cryptocurrency and the rise of CBDCs. Cryptocurrency obviously is on the rise right now. And these are some of the reasons that I have found. The US dollar is declining. People are losing their faith in the governments, the banks, large institutions, media, capital flight, devaluation, debt, inflation, government control, and overspending. And Gerard.
Okay.
So I'm going to have to let you, can you be my
What do you want to do?
person? I think I've gone ahead about 5.
All right, so you see the button to the right and the left?
Yeah. So the capital flight, Gerard, I just don't want to. So with the capital flight, this is the fiat leak, and it's lifetime, and this is actual US dollars moving into cryptocurrency.
What do you want to do?
I'm trying to get back to my thing. I'm going to let you control it. Capital flight. These are some of the reasons of capital flight: the increase in taxes, possible of defaulting on the debt. Investors are losing their confidence in the American dollar, devaluation of the dollar.
You don't need to do that. Yep, that's the button to the right or the left.
So the devaluation of the US dollar, the economy's performance is at the heart of all of this. So the economy in the United States is also something that's happened globally. As COVID shut everything down, the economy stopped. However, the American habits are that this is a consumption nation. And so to fund the habits of the American consumption, we are borrowing money to keep up with the consumption of the American culture. And the United States is a debtor nation, which is borrowing to keep up the lifestyle that they are used to.
One thing about that, if you go to the US debt clock, you'll find that now on the US debt clock, there's a new metric there, which is the dollar to crypto ratio.
So with the debt, COVID has inspired the government to create the Payment Protection Act. So the numbers on this are different. I remember when Michael Cunningham said that it was $13 trillion that helped us out of the 2008 crash. Some of these numbers, I read that it said $3 trillion was created in 2020. Another one said that $9 trillion was created to bail out the banks. Gerard has said that he found it was $14 trillion that was created in 2020. That $14 trillion was added to a 4.5 trillion base, which had become 4.5 trillion since the beginning of the nation, which was in 1776, up to 4.5 trillion. But in 2020, we added 14 trillion to the 250-year-old number, which had been at 4.5. So that is the Fed's massive money printing will probably lead to hyperinflation, but a quarter of the dollars in the US economy were created within 1 year in 2020. This is 1 month. This is only 1 month of money expansion from August 2021 to September of 2021. The infrastructure bill. So these are numbers that I found myself. The infrastructure bill that passed in September was 1.2 trillion. When I read about what was happening with this infrastructure bill, it's fixing roads, trains, bridges, all good things, which sounds like it's a great investment. However, when I found out how much of that 1.2 trillion was actually spent on infrastructure, it was 550 billion out of that 1.2 trillion is spent on infrastructure. I asked my mathematician son, what percentage of 1.2 trillion is 550 billion? It is 48.5%. That's less than 50% of this bill is going to be spent on infrastructure, even though it's called infrastructure. The other 50%, what is it spent on? That is not being advertised in the media. So this is a chart of if you had $1 in 2009 and you used that $1 and bought, and you kept it as $1, or you put that $1 in Bitcoin. This is a chart that shows you what happens with your dollar. The dollar is steady, but it is steadily going down. In 2010, your $1 would be 98 cents, but your Bitcoin would be $17.30. In 2011, your $1 would be 95 cents, but your Bitcoin would be $299.29. 2019, you can see the depreciation of the dollar, but it stops here in 2019. This chart was made before COVID. After 2019, the decline of the dollar is rapid, and the increase in your cryptocurrency is even more rapid. So this chart, even though it was very impressive before COVID, is even more rapid after COVID. Decentralized cryptocurrency cannot be printed or manipulated by the government control. Therefore, CBDCs are not cryptocurrency. They are centrally controlled and owned by the banks and the government, even though the government is calling them cryptocurrency. They are not. So this is the Fed bank response to cryptocurrency. It has changed. My point here is that what they said in July of 2021, now what they said even before this is even more drastically different. This just shows the change in a couple of months. So July 14, 2021, the Federal Reserve Chair Jerome Powell said one of the stronger arguments of the U.S. central bank CBDC is to undercut the need for private alternatives such as cryptocurrencies and stablecoins. He said a more viable option would be to have a CBDC. In September 30th, the Federal Reserve Chairman Joel Powell said he does not intend to ban cryptocurrencies, but he said stablecoins need greater regulatory oversight. What does that mean? I'm not quite sure. Sounds like they want to make sure they own them. A stablecoin is a cryptocurrency that has equity backing it. Some of the stablecoins that exist are Tether, USDC, Binance, USD. Powell said that in a hearing, this is Powell speaking, if you had a digital US currency, you wouldn't need stable coins. You wouldn't need cryptocurrency. I think that's one of the stronger arguments in its favor, the favor of a CBDC.
Can I add one thing?
Yeah.
So it's my opinion that if the government puts out a CBDC, it's going to rapidly result in the demise of the dollar. Because if you put a wallet on everybody's phone, that wallet can hold CBDCs, but it'll also be able to hold other types of cryptocurrencies. And as people watch the value of the dollar the digital dollar go down, and the value of cryptocurrencies go up, it's going to hasten, I think, the flood from fiat or government-backed currency to decentralized currency. That's just my opinion.
So these are just bullet points that they're talking points. I'm going to try to not give you opinions. I'm not a finance person. But these are just some of the things that Powell has said. I went to Powell because he is the chairman of the Fed. We have pretty strong regulatory framework around bank deposits. He's defending himself, for example, or money markets. That doesn't exist around stablecoins. And if you're going to be a significant part of the payment universe, which we don't think crypto assets will be, and he said that in July of this year, then we will need appropriate regulatory framework. Does that mean the Fed would need to control those stablecoins? In 2021, Powell's remarks were echoed by Lael Brainard. She said, households and businesses could be harmed by a fragmented payment system that featured too many stablecoins. So when he was asked in September of this year about his comments about CBDs replacing crypto, he said that he had misspoken. And they're good at covering themselves up. When he was asked by Congressman Budd, and I believe Budd is on the cryptocurrency blockchain caucus, he was asked by Budd directly whether or not he intended to ban or limit the use of cryptocurrency. He said no. He said, I have no intention of banning them. That's what he said, but it sounded like he said the opposite only 3 months earlier. And then just 2 days after that, he was talking about the digital dollar. So that they're working on a digital dollar. Okay, so these are two hands of they're not talking to each other, but they're working together. The US Digital Dollar Project is being run by the Digital Dollar Project. It's a consenting people from Accenture and a former US the former Federal Reserve
Giancarlo.
yeah, Giancarlo. There's two Giancarlos, and then there's the one other guy. So one guy was at Accenture, one was a formal Federal Reserve. So they're very close to the Fed, but they're separate. And basically the Digital Dollar Project is creating a US digital dollar. And when it's ready, they're keeping it separate from the CBDC, but they did say it won't be accepted until it's adopted by the CBDC. So the digital dollar is a bank issued tokenized form of the US currency. A number of countries have already experimented with this. China's yuan. William Michael Cunningham's circle had China as the second biggest block of that circle outside of the US dollar and the cryptocurrency. The Digital Dollar Foundation, formed last year by Accenture, and here are the people, the former Future Trading Commission, Giancarlo, Lab CFTC, Daniel Gorfine. We've actually asked Lab CFTC to come and speak at our event. They have not answered yet, but it is a private effort. Once it's up and ready, then it seems like they're going to hand it over to the Fed. Of course, it's something that is minted and issued. If it's minted and issued by the Fed, it won't be a central bank digital currency until they take it. We can use a stablecoin structure to directly demonstrate how the CBDC would perform. The only difference is who the issuer is. I believe that they're saying that once it's ready, they're going to hand it over to the Fed. The Digital Dollar Foundation is building the digital dollar now. And when it's ready, they will turn it over to the Fed. Treat said he expects the results to come quickly. Some of the crypto community have speculated that the establishment of the US CBDC would lead to bans on private crypto, as was recently happened in China. But Powell's remarks suggest otherwise. And I think that's all I've got.
All right. So she just wanted to share with you some research that she did. Any thoughts, comments, questions, agree, disagree?
That was sobering.
Well, like I posted in the comments, to me, the behavior of the politicians is a reflection of the will of the people, because the people wish to receive more in value than the effort and productivity that they're expending. And so and the only way that we can persist in that behavior is if the dollar remains dominant or some federal digital entity is dominant. And any threat to that dominance, I see potentially being curtailed or squashed.
I do think that there's another factor, and that is, I think there was a Gartner report that said about 16% of Americans own some form of crypto. I was talking to my I don't know what he is. He's the father of my son-in-law. And when I first told him about crypto, he was angry, right? It caused a lot of cognitive dissonance. I mean, his view of the world and how money works was threatened by this crazy idea called Bitcoin. Sooner or later, he bought some more. They got nervous, they sold. And after they sold all of the Bitcoin, that they bought, they now are at about 600,000, right? In terms of the
They didn't
assets.
sell all of it though.
No, they sold.
They sold their investment.
They sold their initial investment. And so in his circles, and I don't run in those circles, but in his circles, there's a lot of folks and institutional investors that have crypto. We're seeing it in institutional portfolios. I think it's too late. I don't think they can put the genie back in the bottle to outlaw it, because I think there's too many people that are profiting very handsomely from it. So I think what you'll see is the government is going to be very worried. They're going to try to it, but politically, I don't think they'll be able to do it. And every day that goes by, in fact, if you go to the gbaglobal.org website, on the homepage, there's a report called "The Impact of Cryptocurrency Adoption on Government." And if you download it, you'll see some of the stats. I don't think they can put the genie back in the bottle.
Well, my fear is, and I do have a lot of crypto, I do not believe that the people that will cause the most violent reaction are those who own crypto. Violent reaction to the decline of the dollar. So the people who are going to be most hurt are not those people that own crypto, but they aren't the majority of the people.
What makes you think those people don't own crypto? But look at JP Morgan Chase as an example.
No, he's talking about people that don't really have money to invest. Those people don't own.
Yeah, that's really what I'm talking about. For example, I doubt if a large percentage of the people who were storming the Capitol on the 6th are crypto holders. And I think that could be an environment.
I would disagree. I would honestly disagree. I think I think that crypto is not a right or left issue, right? I really don't. I think.
The reason I mentioned that, I think that was the tip of the iceberg. And I wasn't putting in the context of right or left. I was putting in the context of people who are sophisticated enough to enter into alternative investments. And I don't think that they constitute the largest voting bloc in the country. And I see our reckless behavior that we're undertaking right now is we're building up a series of IOUs, and the people who are going to be dependent on those IOUs being paid in the future are not necessarily those who own crypto today. They're not going to need those IOUs to be paid. And those folks who need those IOUs are those who have no savings. And if they see that the dollars they receive in their Social Security check or their Medicare are essentially worthless, they're going to be pretty upset.
Yeah. Yeah.
I just see that as a large, that's the biggest threat that I see to crypto in the future. I don't see that happening in the next 5 years, but in the out years, I see that as the biggest threat.
You know, I think if you look at the chart that Michael put together, in a 10-year span, you saw a really dramatic shift. That kind of a dramatic shift does not happen without significant consequences. And Bill, I think that when things happen today, they happen fast, right? If we look at what happened with GameStop, you know, I know more and more people that are moving into crypto, and the more people that do it, the more people that do it. My son, who's, what's the hell is Nicky, 19, 20? Oh, sorry. Sorry. I just revealed a great deal about my fatherhood skills. So my son, who's 22, he's a server. He's a musician, but he also, up until just recently, was waiting tables at a high-end restaurant. One of the other servers there, who's 19, just bought a house because he's literally made so much money in crypto that he was able to put down a substantial amount on a very large house. And it's the young kids that are, and I want to go to Mark Wasser for a second, because he's a great example. These kids who are playing games, right? These young folks that they're exploring these alternative money-making mechanisms. They're the ones that I think are going to drive this, and they're going to drive it faster and faster. And when old guys like me find out that my son bought a couple dollars worth of Bitcoin and paid for a car, a motorcycle, his college tuition, and his living expenses, it's these young kids that might be pushing it, but they're driving me into it. Mark, you want to talk a little bit about how?
I want to make one point though.
Yeah. Then I'll turn it over to Mark.
Yeah. Something in the research that I believe Trevor did bring up is that the culture in the American, it's the American culture. And I don't mean this is everyone, but our culture is to spend more than we make. We are not a delayed gratification culture. Certainly the government is doing that by spending more than they have in their budget. So they push the budget up, or they basically create more money. But it's not just the government that's doing that. It is the culture of the people. And so that 19-year-old kid who earned money with crypto and bought a house, his amazing point was he saved that money. That boy understood delayed gratification. Is this being taught to our young people, whether they have crypto or not? If they put their money in dollars, it's going to decline. But if they don't put it into anything, it doesn't matter whether it's crypto or not. If they don't learn how to save and live below their means, that is the challenge. I believe that's what Trevor is trying to say. The challenge is the culture that they do not save their money, they spend it, and more than they have.
All right, I'll let Trevor respond, and then I'd like Mark to talk a little bit about sort of the next generation and what's happening with crypto and tokens from the next generation perspective, specifically around gaming. Trevor, did you have any other comments on what Kathy said?
Yes, I agree with what Kathy said. Only I was looking at it, especially from a higher level, and that not only do individuals want to spend more than they're making, but we expect to receive more from the government than we are actually contributing. And those expectations are the biggest drag and the biggest threat to any sort of competing currency, because once those obligations, I'm talking about military, I'm talking about health, I'm talking about retirement, once the public sees that those obligations cannot be met, and part of the reason that they can't be met is because other folks are successfully hoarding money in other currencies, there will be a backlash.
I agree. I totally agree. Mark, you want to talk a little bit about what's going on with the next generation tokens, games, and currency?
Sure, absolutely. So I sort of jokingly said during my introduction that I'm now apparently a blockchain gamer, professional blockchain gamer, but it's really true. I started playing a blockchain-based game called Splinterlands about 2 years ago. And, the in-game assets and tokens went up, they went down. I didn't really regard it as an asset. It was just a very fun game to play until late this spring, all the in-game assets started going up and up and up and up to a factor of 40 to 90 for all in-game assets. And the in-game coin went up by a factor of 10. So previous things like, oh, you generally play like 10 matches a day and you get a quarter for them, suddenly you're making $25 a day just for those matches. The game has a lot of tournaments. The tournament rewards went from fairly negligible amounts to, I guess, one tournament last week, I made $1,500 for about 2 hours of work. There are any number of games currently under development, but there are already several with similar stories. A lot of people have heard of Axie Infinity. Axie Infinity is very heavily invested in by a large company called Yield Guild Games. And while the cost to enter the game is prohibitive, what Yield Guild Games does is they actually provide so-called scholarships. But what that really means is that they set up players with the necessary in-game assets to be able to play, and then they get half of that player's profits. So they're pulling in money hand over fist currently because their assets are appreciating and they're getting cash flow from players. And of course, it's a virtuous cycle. So they can buy more assets, which go up in value. And as they buy more assets, of course, the assets are becoming more scarce. So this actually is a wonderful thing. They're based out of the Philippines. Apparently, it's relatively straightforward for apparently an average player in the Philippines to make a couple thousand a month, which is a living wage there. And
Hey, Mark, is it true, and you don't have to disclose any personal information, but is it true that you know of people that make six-figure or multiple six-figure incomes for working just a couple hours a day?
Yeah, it's possible. It depends on your buy-in price. It depends on what other things you've done in the game. I'm doing very, very well in part as well because most in-game currencies want stability. So they tend to start liquidity pools. And then in addition to the liquidity pool's normal benefits, they will also give in-game assets. And they tend to be very, very generous with those. So again,
but let me pause for a second because I want to sort of pivot to kind of why I think this is important from the wider perspective. So these kids in middle school, right, are playing these games, and there are entire economies, right, and some of these in-game assets are valued. Mark, what's the top end in-game asset that you're aware of, price-wise?
So yeah, I mean,
the
the problem with Splinterlands currently is that there are cards that you cannot buy on the market. So nominally, I see cards that I own being sold for a couple million.
Okay,
Oh.
so there are kids in middle school,
Wow.
right, that are playing games with the capacity, right? Now, Mark doesn't have a PhD in Splinterlands, right? For 2 years, he's been playing this game, and he's in an environment where there's huge amounts of money. So kids are thinking, why should I go to college, right? Why should I spend all this time? And this entire sort of movement of our young folks in this whole new alternative world. What do you think happens when they're presented with things like cryptocurrency? Do you think that they've got some big, bugaboo about it, or are they just going to dive right in? Right. And so I think that this generation right now, we're about to see this massive flip into all kinds of sort of new economic things, and government's just not ready for it.
So I also believe that with this run up, there are at least 100 newly minted millionaires because of Splinterlands. And I'm aware of several people who have made multiple millions from it.
And they're going to take those deposits and they're going to put it in maybe the Federal Credit Union.
Yeah,
Listen,
I have chased after some of them to join the GBA, but haven't had success yet.
guys, listen, thank you all so much. 2 hours is a bit of a long call, but I always love just the conversations and stuff like that. So we'll do actually, what's the date of the next? I don't know if we're going to do
It's
it.
December 2.
No, for the, I don't know if we're going to do this next month because of Christmas. I think it's a week before Christmas. If it's a week before Christmas, we'll do this again in December. If it's Christmas week, we won't. Third week in December, is that? Yeah, okay. Yeah. All right.
Third week in December.
Third-
Are you talking
third-
about
third
the
Tuesday.
full
Yeah.
week? Are you talking about the
Actually,
14th or the 21st?
21st.
Nah, that's a bad idea.
All right, so we won't do this. We won't do this event in December. We'll do it again in January. But
January will be the week of our event.
we can do it. It's just a 2-hour meeting.
Okay.
Yeah, we'll do it. Thank you guys so much. Any parting thoughts, comments? Is this helpful? Was today helpful for you guys?
Very much so.
Great.
Slowly, it's fantastic.
Yeah, it's been great.
Exciting.
All right.
Thanks-
Well, listen, you
thanks a
guys,
lot, Jared.
you bet. You guys have a bodacious day, and we'll look for. Remember, if you want follow-up information on the credit union, just make sure you sign up on the gbaglobal.org website for the newsletter, and we'll get that information out to you just as soon as it's ready.
Thanks, everyone.
Bye,
Kathy,
guys.
wait till
Happy
You
holiday.
might want to leave
Thank
this
you.
open just for a little while if you can, just so people can scrape comments and things like that.
Absolutely. Absolutely.
And I think Kathy's going to keep a few of us awake at night now.
Yeah, the thing that'll keep you awake is come to the event in January. That is the real prize.
Mark, you're local, right?
No, I'm in Raleigh, North Carolina.
Oh, hey, I'm going to be down in North Carolina next week, next
Thursday.
Thursday. Yeah, where's Ross and Terrasu? Ross,
It's
are you
very
still
close to Raleigh?
Is
No,
Ross-
actually, I'm sorry. Raleigh's further west, isn't it?
No,
It's in Winston-Salem.
On there
I'm in Winston-Salem. Yeah.
on December.
Mark, are you going to go down too?
Yes,
down
it'll be
where?
my second trip in less than 2 weeks, since I'm also going down tomorrow for Thanksgiving at the Sisters.
Oh, nice.
That's
Nice.
December 2.
Yeah, December 2. I'm teaching a blockchain foundations class.
at Wake or Wake Forest?
I don't know where Ross and Terrasu's got. They've lined up a couple different places. I'm
Okay.
not sure which one it is.
No, Ross, he sits in Greensboro, doesn't he?
No, Ross and
High
Terrasu.
Point.
High Point.
Okay.
High Point is only about 25 minutes west, or even only 20 minutes west of Greensboro.
Right. But not Raleigh.
But not.
No, I'm sorry. I had relatives that used to live in Raleigh and Winston-Salem, and I just confused the two for a second.
Okay.
Mark, I want to just refresh my memory. Did we decide that the token distribution, we were going to wait till the new website, or were we going to go ahead and do the token distribution before the new website?
We were thinking that we wanted to wait for the new website because basically with the new website will come a new look to the wallet and the like.
Okay. And then
So
one
it's
more
slightly
thing.
different.
I had a conversation with the TON developers last Friday, and we walked through the blockchain maturity model, right? And so one of the things that we're doing is we're building an assessment framework. It's a couple degrees of a rigor. So the first level of rigor is essentially just a self-declaration. The second level of rigor is review over the stuff that you self-declared. And then a third level of rigor is an independent assessment, right? And so they're excited about building an assessment methodology, right? So that people, if they want to have their blockchain solutions assessed against the BMM, they could have it assessed, and that could be a revenue generator. And I talked to Ingrid about potentially including this as something for international blockchain solutions. So I just want to let you know about that conversation that we had on Friday. And so now we're not going to meet this Friday because of Thanksgiving, but they're taking a look at the blockchain maturity model and seeing if they can help build an assessment framework, an automated assessment framework. All right, well, I'm going to go ahead and drop it off. Hopefully everybody's had a chance to scrape the chat, scrape now or forever hold your peace. And with that, I'm going to go ahead and end it. So you guys have a bodaciously awesome, fantastic day.
You do the same.
Have a great one.
Happy holidays. Thank you.
Holidays.
Happy holidays.
Happy Thanksgiving.
Bye, guys.